The markets have been volatile in the last few days, and we know that it is impossible to remain calm while facing losses. But it is very important to not panic. In fact, these fluctuations are a part of equity investments. See, in the last couple of years, businesses were affected by many factors. First of all, we had the pandemic and there were frequent lockdowns. And after that, it was affected by the Russia Ukraine crisis. Now, all these have led to a pressure in fuel prices, have increased the raw material cost, they've even led to supply chain disruptions. And because of all these factors, many businesses have been shut down, and the impact has been seen in the global economy. Now, in this video, I'm not going to predict whether a recession is on its way, or I'm not going to predict when the stock market is going to stabilize, or how far long is the market going to fall. But I'll tell you that what should be the right course of action for any retail investors. Historically, markets have crashed due to pandemic, dot-com bubble, and many more reasons. So we cannot predict the intensity or the duration of the crash, but there is one thing that we can surely predict, that if there's a market crash, the recovery is bound to happen. Sooner or later, markets will recover. Now, let me tell you about one incident about my friend Ria. So, she bought some shares of Infosys in 2007 for rupees 300 each. Now, it was one of the highest point of that share at that time. Now, as the crisis of 2008 began to creep in, within 1 year, the share went from 300 rupees to 150 rupees by November 2008. That means erosion of more than 50% of the capital in just 1 year. Now, obviously, it is the human tendency to panic. I mean, who would not lose temperament after erosion of 50% of the capital? But Ria stayed invested. In fact, she started buying more and she bought her average price from 300 to 200 rupees per share. Now, within a couple of years, this share went from 150 rupees to 400 rupees. That means her capital doubled in just a couple of years. In the same way, from December 2007, the Nifty fell from 6,000 points to 2,600 points in January 2009 after the subprime mortgage crisis and the Satyam fiasco. But the markets recovered within 12 to 18 months. Similarly, when the pandemic affected businesses in 2020, Nifty dived from 12,000 points to 8,000 points, but again recovered within 7 months. The lesson to be learned from this is that crisis cannot be predicted. Nobody could have predicted the pandemic or the war-like situation. But what could be predicted is that even if there's a market crash, there will be a recovery. Now, this also explains why we're not rebalancing our portfolios. The stocks in our portfolio are fundamentally strong and the companies are performing exceptionally well. And there is absolutely no problem with the companies, and we are not expecting any surprises in the future. It is the short-term market sentiment that is driving the prices down, which should not bother investors. Also, look at the valuations of the HQRP small case. The portfolio is operating at a PE of 15 times as compared to the benchmark of 24 times. This means that the valuation of the companies in this portfolio is yet to be unleashed. Now tell me, as a owner of any business, what would you want? You would want the business to earn more profits so that there are more earnings for you. Now, if we look into the companies in our HQRP portfolio, so one company is PCBL Limited, which recorded the highest ever revenues in quarter 4 of financial year 2022 and the highest profits ever for the financial year 2022. Similarly, with JSW Energy, where the company doubled its profit in just 1 year and have recorded all-time high revenues and have multiple projects in its pipeline. Now tell me, as the owner of these companies, would you sell your business when they're giving the best outcomes? The times are uncertain, which is dragging the indices down. But we are looking at the bigger picture. We are looking at the companies and their performance, and hence we continue to hold our stocks.